Eric Muathe with Muathe.com. Just taking a look at this chart here for Village Supermarket. Now I want to use this chart to ramble on and just discuss some things I'm seeing on charts, and pretty much I don't have a set topic I want to cover. I guess I just want to show you how we can use all the things we learned to form a picture here. And what I'm going to try and do is take a look at this from a weekly and from a monthly perspective. Now right off the bat, it's always good to observe what the moving averages are doing. Here we can see that crossover between the 13-week moving average and the 34-week moving average. Here was a bearish crossover, and of course we have this pressure to the downside here, and then ultimately we have the exact opposite, which is a bullish crossover between the 13-week moving average and the 34-week moving average. And of course the stock has had a bias over the last couple of months, let's call it for most part for the year 2016. Now if you assume that you already own the stock, one thing you can do is just use this weekly chart using the RSI lows line to form a line on the sand. So if you own the stock, as an example, if the stock cracks below this RSI support line, that would suggest that now it has broken below support, and that maybe you should not be holding on to the stock because now it opens the possibility for lower prices. So here we can use this simple reasoning, RSI lows, connecting the RSI lows going back throughout this late 2015 to the current trading here, late 2016. So as long as that blue line is holding, you can own the stock. Now let's assume you don't own the stock. You're thinking maybe you like the sector, you'd like to get some representation here. There are other things that make you have an interest in the stock. I would say you can use the recent weekly closing high for an entry there. That should be at about $35. If it can move above that $35 range, then you can be a buyer instead of owning it here for a bounce. Now yes, let's just say you wanted to own this. I can show you a reason why you can do that even at current levels based on the weekly chart. Is we've bounced on the RSI 50 before, which is this re-entry at around the $30 area, and here we are holding above RSI 50. If the stock can hold above that RSI 50 and hold this RSI support line, then we can say that this action plus holding above the RSI 50 might suggest that the next movement is higher. So on this weekly chart, not a lot we can read from this, other than also there's another indication of over the last couple of weekly price highs. We're talking about this price high here. This came at the expense of the RSI. You can see here RSI made a lower high, and it is that negative divergence that set the stage for this recent weekly pullback. In other words, you made this high while the RSI was being rejected as it moved above 69.1. Also, the fact that the RSI did not show an improvement in strength was a sign that it was running out of technical strength while prices were improving. And of course, since this high here, we've seen the stock pull back. Now one thing here I'd like to point out, always be on the lookout for situations where a stock is being rejected as it tries to move above the 69.1 threshold. If this rejection is with uniform action, it tends to be more meaningful. Now let's take a look at the long-term monthly chart, because there's a lot we can read from this chart. Again, no real reason why I'm talking about this chart, but I just saw a lot of things we can look at the chart for guidance. Now this is all data monthly, and the monthly paints a little bit of a different picture in my opinion. For me, if I take a look at this monthly chart, what I see is the possibility that the stock is now looking like, for the most part, it is showing that the trend month to month is down. And again, we come to this conflict where we have one chart saying one thing, which is the weekly chart, saying that it's not as bad as it looks, or that the weekly chart is stable, but the long-term picture is bearish, in my opinion. So we have this fight between the monthly chart, which is pointing down, in in my opinion. I'll show you why. And then we have this other view from the weekly chart, which I can say is sideways. So we can say the weekly chart right now is sideways to maybe even a little bit of a bias to the upside if the 50 RSI can hold and the line we drew connecting weekly RSI lows. So what do you do when there's a conflict between one time frame and another? Whenever there's a conflict between two time frames, you want to default to the bigger time frame. In other words, the big time frame has more energy, more power than the smaller time frame. So whenever there's a conflict, you want to go with the bigger time frame. So here I would use the monthly time frame to indicate to me why the stock could struggle, and let's take out the reasons why. Number one, let's take a look at how this high was formed, and we see that it made an improvement in price highs, but at the expense of this RSI resistance line. So this RSI resistance line connects RSI highs going all the way back to the highs here in late 08, the highs there in late 2010, and now coming back and connecting that line. So we can see that that is definitely a line of resistance. Let me draw it with a different color here so I can show you what I'm talking about. And so here we have this line, and this line is obviously pointing down even as prices recently made new monthly closing highs. So that's one red flag. The other problem here is the weekly chart is failing. In other words, it is trying to move, or was trying to move, above the previous monthly closing high, but the stock has moved back below the monthly closing high. Let's say it this way. You have a breakout, you close above the previous monthly closing high, and then you now drop back below that line. So that is right now looking like a failed breakout on the monthly, which is a sign of a stock that could easily see lower prices. So the issue here is the long-term monthly view is not as strong. Also, there's another view which goes back to the break line here. There's a RSI trend line. Just figure out where the break took place. This RSI movement brought the stock off the highs there in the mid 30s all the way to the higher teens. So that break was decisive. We're talking about this break here. We draw a line from there. Anytime we have uniform activity rejection on that line, we know that that is good for a sell signal. And we can see right now the stock seems to be constructing a double top. And that to me is a problem. So we can see the monthly charts again. That's another third reason why it seems to be stalling. Let me show you another reason why I think there's a lot of resistance lines on this chart. And again, if you are considering owning any stock, it's always good to take a look at the long-term picture so you can have a sense for what the big picture looks like. Now, if you take a look at the recent lows going back 2011, extend them out, you can see that it connects nicely with the lows here and the lows there. And then recently, since this break here, which is this movement, stocks come back to back test that blue line and failed, which is the highs there. And now we seem to be forming what looks like a double top rejection on the same blue line, which is indicating here that with this resistance, chances are this stock eventually pulls back. So one more time, it's back test situation here, connecting the lows here, extend them out, and since that line was formed, you can see a break for the highs there. We come back and test the line here, we are rejected for the highs there. We come back here, we've hit that line twice over the last couple of months, and now we are also pulling back, suggesting that month to month, again, looks like more than likely this is an instrument that is going to be pointing down. Of course, we don't know that for a fact, but we can see here from this monthly chart that more than likely the indication here is for lower prices in the coming weeks and in the coming months? Of course, we shall see. Now, the next portion of this video is going to be a little bit of an oversimplification, but it is important to always understand what is going on. So what I want to talk about here is this phenomena that I call the RSI 50 bounce or rejection. In other words, if we take the RSI, so let's say this is RSI 50, and here we have the monthly chart, which is good for monthly long-term investing, and so this is the RSI 50. What I'm saying is, whenever you see any type of uniform activity bounce on RSI 50, it could be double bottom, it could be a triple bottom. All these are uniform activity because if you break them in this is uniform activity back to 50, uniform activity back to the 50 line, uniform activity, and then again uniform activity. So you have to understand how to appreciate that. But every time you have any type of uniform activity, even support with uniform activity above the line as an example, it generally means that a stock is going to go back to all-time highs. So let's test that theory here. So we can see clearly that here we have support back above the, or support around RSI 50 for the lows there, and definitely the stock did go to record fresh highs. So here we go to fresh highs, so that's good. Let's test it again. Here we got a confluence of support with uniform activity, support there, even here looks like uniform activity below 50 back above it. So once it moves back above it, and especially when it clears recent RSI highs, so somewhere around here there were some highs, once it moves above that, after, and I have to stress this, after RSI holding the RSI 50 line, the stock gives this movement above recent highs, and you can see the stock goes on to record fresh highs. So let me do that again. So what we're talking about here is, if you're looking to own stocks for a period of time, if you see a stock coming back and showing support back above RSI 50 after a pullback, even here you get uniform activity below 50 and back above it. So what I'm saying is, you know that the stock could have momentum once it clears the recent highs. So like right there, let's draw it. So this, let me change color. So that zone there, once it clears those RSI highs here, after finding uniform activity support at the RSI 50 level, you can assume once we move above that range on the RSI that prices are gonna go to fresh highs. Did they go to fresh highs? Yes, they did. Again, we see uniform activity bounce on the RSI 50 level, which is this lows here. Once we show uniform activity bounce, and more so when the stock clears recent RSI highs. So once it moves above this level, again after we've already seen evidence of RSI 50 support, which is this price entry, you can assume logically that the stock is gonna go to new highs. Let's test that theory. Eventually it recovers and goes back to new highs. Again, we see uniform activity bounce here, which is the lows there. The stock recovers, and once it recovers, it's nice V-type uniform activity support. Does the stock go to new highs? Yes, it eventually goes to new highs. So that's how you can tell that after a pullback, a stock might go to new highs. So we know that markets don't go in a straight line, so we're talking about stocks doing this. And the way you know that this could be a stock that is going to be going back to new highs, so again, if we take our RSI 50 line being there, so that is RSI 50, whoops, every time the RSI bounces with uniform activity, so let's see here, so let's say the RSI here bounced with uniform activity, This bounce during this period is a re-entry, which means the stock is potentially going to new highs. Again, we can assume that if it bounces here, let's say with something like that, this is uniform activity below and back above RSI 50, which means that it is suggesting that the instrument might go to fresh highs. And even we can say here, maybe it does something like this. It's uniform activity because this is uniform activity back to RSI 50. This is uniform activity from RSI 50 back above it. So which means that this was a re-entry here. And of course, we assume that the stock goes to new highs. And let's just take one more example. Maybe it holds above RSI 50 here, something like that. So this period here is uniform activity support for this re-entry. Suggestion there is that the stock is going to be recording fresh highs. And I did say this is oversimplification, but trust me, once you get a sense for this type of behavior, you'll be better positioned to make decisions, especially if you want to hold a stock for a couple of weeks, a couple of months, and the stock has pulled back off highs, and you want to own it, knowing that it might have a good chance of moving to fresh highs, giving you a chance to run up some profits on the recovery move. Here we have uniform activity bounce back above RSI 50 for the re-entry there. Does the stock go to new highs? Yes, it does. In fact, it even touches RSI 50 here. And again, that confirmation of support led to new highs. Here we have double bottom support. It was messy, but it never trades below RSI 50. And we're talking about the lows in price here and lows in price here and here. Ultimately, it goes to fresh highs. Now you'll notice the stock doesn't really drop until finally it has this formation here, which is not uniform activity. This period here was not uniform action. In fact, I can even see that it broke a major trend line. So let's see that trend line. This trend line here was a sell signal. So we can see that what changed recently, coming into late 2013 there for the highs there, is that we broke a major trend line, and that trend line has changed the picture here. We broke below that off the highs, and we've had the biggest drop since then. Now I do note here the stock does eventually here tag new highs. So what happened there? Let's take a look and see whether there's anything on this chart that could have given us an entry here. And I can see if you draw a line connecting RSI lows, something like that. Let's just draw it there. We can see that over a period of months there was a double bottom support here and here, which corresponds with the lows on a monthly closing basis there and there. So there's always a lot of information on these charts. And I think what I'm trying to say here is, if you're looking to own a stock, why not take the time? Take the time to look at the chart, draw lines. There are no hard rules at all. Just try and figure out what the RSI is doing. I think if you spend more time on the RSI and less time in the price, you might have a better sense of what is going on just by studying the RSI. Here we can see that we've learned so much about this stock just by looking at the RSI, and prices eventually did move in the favor, or at least in the direction that the RSI was suggesting. So lots of rambling on here. I think the main takeaway is it's good practice to always take a look at the long-term picture. If there's a conflict between two time frames, default to the bigger time frame, and you have time to study the charts for the stocks or ETFs or options or commodities, whatever, or forex charts, anything you want to own. Make sure you account for the long-term picture and draw lines on the RSI charts. Try and understand what the RSI is trying to say, because once you figure out the big picture, then you can make decisions based on small time frames. In fact, talking of small time frames, now keep in mind we've taken a look at the long-term picture for this chart, and we've concluded from the long-term monthly chart, chances are that the stock is, for most part, looking like it is pointing down. So that is the conclusion. Are we sure it's gonna drop? No, but at least we can make this bet that this instrument seems to be pointing down month to month. So let's take a look, for example, at the hourly chart. And I noticed that the hourly chart was giving this resistance line here. As you can see, this line here broke recently, which is this breakdown, which brought it below this level here. It's coming back in the current market and is showing hour to hour resistance, which means that because the monthly chart is negative, any small time sell signal or any small time frame sell signal like the hourly, if you see that which is now in line with the monthly chart, it means more. So because the hourly chart is pointing to resistance, it might suggest that because of the weight of the monthly chart, this is where you can take action and maybe place a bet based on hourly chart being in sync with the big picture. So that's one line of resistance. The other is based off the recent break. So let's draw that line. So RSI broke down somewhere there. That RSI breakdown brings the stock off the highs there. We draw a line from that break. So we are looking for the sentiment where it broke down. Keep in mind, I personally believe RSI is best used as a measure of sentiment. So once the sentiment broke down here, the stock dropped. So we can use that information, which is now this horizontal line. You can see uniform activity rejection, which is why the stock is coming and showing some resistance here in price. So because the monthly chart is now in sync, in other words, let me put it this way, the hourly chart actually, because the hourly chart is now in sync with the monthly chart, so hourly is now in sync with the big time frame monthly chart, we can take this opportunity here from a learning perspective to place some short ideas with the view that ultimately this is suggesting that now that the big picture is being confirmed by the smaller time frame, one can place a bet in terms of timing and see whether the stock is truly now set to drop. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Mwah.